I know some of y'all are new to cryptocurrency, so on today's video, we're going to talk about decentralized finance and we're going to focus on liquidity pools. Right now, we're in a market where crypto is either going down or trading sideways, but there is an opportunity for us in DeFi to earn some passive income. So let's get to it. So decentralized finance for the new investors, the new crypto enthusiasts. DeFi is short for decentralized finance. DeFi is an umbrella term for peer-to-peer financial services on public blockchains, primarily Ethereum. Okay, keep that in mind. Why is DeFi important? DeFi, it takes the basic premises of Bitcoin digital money and expands on it, creating an entire digital alternative to Wall Street. So when you think about banks, we're talking about borrowing and lending, storing your money, storing your assets, being able to trade. But since DeFi is peer-to-peer, you and me can use it. This is why it provides so many benefits to us. It cuts out the middleman, makes the fees and everything smaller, and it allows us to bank for ourselves. It allows us to be in charge. Again, open. You don't need to apply for anything to open an account. It is pseudo-anonymous, right? You don't have to really basically do a ID system like with banks. You don't have to give them your social security number. It is flexible because you can do it anywhere in the world, on the internet, on the phone, anywhere you at. You can keep your money safe. You can be the self-custodian. And it is also fast. When I send money across the world, I don't need to do a wire transfer. I can send it directly to your crypto wallet. That's one of them benefits. Now let's talk about what's really important. What is a liquidity pool? Liquidity pools enable users to buy and sell crypto on decentralized exchanges and other DeFi platforms without the need for centralized market makers. Essentially, I put some money into a pool, let's say USDC. Another person or myself also put some money into a pool, let's say Bitcoin or Ethereum. That allows the USDC and the Ethereum to be liquidity for someone can trade in and out. So if if I'm a new person, I take my USDC and I want to buy Ethereum, I put my USDC on the exchange and I purchase the Ethereum. Now the Ethereum leaves that liquidity pool and the USDC goes into it, okay? And then that just happens back and forth over and over. And there's a small spread there and a small fee that the liquidity providers collect the money. And that's pretty much what's happening on Wall Street. But in DeFi, we get some of it. Now let's talk about my favorite platform right now. It's in the base ecosystem, otherwise known as the Ethereum ecosystem, a layer 2. So this is the Aerodrome's front page pretty much. Sell Ethereum and it says buy Aerodrome. That is their token. So that's going to be our focus of today. So how this works, this says USDC/Aero. USDC is the USDC dollar or United States dollar by the company called Circle. Aerodrome, which is short for the ticker is Aero. That's their token for this platform where you get voting rights. You can earn from incentives from voting and be basically a stakeholder in this narrative here. And they give you emissions, okay? So when you deposit USDC/Aero, which means you're taking, let's say you got $100, you're putting $50 of USDC and $50 of Aerodrome, you are combining them in a liquidity pool and you are gonna earn fees when people are trading this pool, right? And so you see here is a volume of 13.93 million and the fees collected was 41,000, almost 42,000. The total value locked, that's all the value that's into this pool of liquidity providers is 32 million. You're earning almost an 8% fee and then the emissions are almost 20% total. So that means you basically are going to be earning 20% on the money that you put in this liquidity pool at 20%. So if you put in $1,000, essentially in a year, you will earn $200. Let that sink in. So right now, when we're in this market of a defeated cryptocurrency market right now, we're kind of in a bear market, I would say, for most cryptos. Watch my video that drops on Friday, the crypto recap #1. We're going to talk about it. I'm gonna break it all down about where we're kind of at in this cycle. I've been now in crypto for almost solid 5 years, making content a little bit before that, and I'm understanding how this thing works. Okay, but this is where opportunity at. Then you have something called a volatile crypto. This is when the spreads are really tight, but you can earn a lot higher fees and emissions there. Very hard to manage. So if you're new to crypto, stick to the basics: USDC, Aerodrome, USDC, Ethereum, and earn you some money. If y'all got some questions, definitely let me know.